Premier Investments owns some of Australia's best-known retail brands. Against the backdrop of some pretty volatile consumer demand, Premier has managed to post a bumper profit. To tell us more, we have Morningstar Senior Equities Analyst Peter Esho. Peter, welcome back.
Thanks, Vicky.
Peter, first of all, can you tell us some of the names behind Premier Investments?
Premier Investments acquired Just Group late last year. Just Group is a portfolio of brands that includes Just Jeans, JJ's, Portman's, Peter Alexander, Smiggle, Jackie Ian, portfolio of brands, predominantly in apparel.
They've just posted annual profit. Did the results meet your forecasts?
It was actually ahead of our forecast. It was about 5 to 6% ahead of our recently revised numbers. It was slightly ahead of guidance too. A profit of $82.7 million, EPS of 62.4 cents per share. They really saw a strong second half trading environment. Like most other apparel retailers, that government stimulus money really kicked in towards the latter half of second half 2009. They saw their cost of doing business go down, top line grow, like-for-like sales improved in Australia. Australian like-for-like sales were up 2% in the second half, and that'll flow through to give a very nice profit number at the end.
Before the result came out, Peter, you mentioned that you see Premier as a bellwether for Australian retailers. Did the results today give you any further insight into that?
It did. It did give a very interesting insight. Most retailers which announced in August had a June balance date. So we really saw numbers up to the end of June. However, Premier reports to the end of July. And they also gave an update saying that the first 7 weeks since then have been ahead of budget, which is very positive for retailers. And it sort of calms down some concerns in the market that post-stimulus spending would be dying out.
So you've mentioned the stimulus. Are there any other contributors to Premier Investments' performance, either in this result or going forward?
Just Group is a very well-run business. It has been very well-run for the past few years. It's got great management. They really know the business. They were hedged, so their currency exposure was minimised. And that government stimulus money really did kick in. They connect well with their consumers. Their brands are very well respected, very well liked by consumers. So it's a combination of factors that delivered that strong result.
Peter, is there anything you can tell us about Premier's outlook?
Outlook was bullish. It's probably better than what I was expecting. They're not the most bullish when it comes to outlook. They tend to under-promise and over-deliver. But the fact that they did come out and say that they're cautiously optimistic, they did note that Christmas is very important, as is for many other retailers, particularly in apparel. But it did have an optimistic tone to it.
Any specifics there?
No specific guidance. Tariffs are due to fall in January. They did say that they hope to hang on to lower tariffs in their gross margin, so that should help gross profit, and it should trickle down to help profitability too. All eyes will be on the top line, on revenue, whether that they can match last year's revenue without stimulus money. And I guess we'll have to wait to see after Christmas and January to see how retailers fare there. But I suspect that they can probably replicate and grow this year's number.
And Peter, what can investors take away from all of this today?
Perhaps one of the most interesting comments that was in the Premier presentation was a note that the Australian economy is performing better than what most had expected. Retail numbers are holding up. The consumer is less hurt by the global financial crisis. That's due to a range of factors, but Premier acknowledged that. So it does set a very interesting note for it does set a very interesting tone for the Maya float, which is due to hit markets next month.
So I guess we'll watch this space. Peter, thanks for your time today.
Thanks.